And how should China resolve these obstacles it has encountered during its overseas expansion or acquisition in certain overseas markets like the United States or some European markets?
Well, it's clear to us that, and from the people that we talk to who are from government think tanks, who are from regional provincial authorities, where there are major exporting centres and where there are companies that are trying to expand overseas, they're quite cognizant of the problems and they're aware of the risks of running into a more trade friction. How does China resolve it? Well, a lot of it's down to diplomacy, of course. The model that seems to have worked well for China in the past is one that was established with Australia, and looking at the way in which the Australian government and the Chinese government managed to work together to agree a formulation on the kinds of companies that they were happy for state-owned enterprises to bid for, and the kinds of proportion of ownership of companies that they were going to be allowed to take. Now, China's probably got to try and repeat that model with other economies as well, whether that's with the US, whether that's with Canada. You know, China's not alone in spending money overseas by state-backed enterprises, of course, because you see this through the growth of sovereign wealth funds that there's been over the course of the last decade. More state-backed money is going into buying up more assets around the world in developed economies, and it's a key fundamental challenge to try and get over, because so much of the last 20 or 30 years, particularly in Western economies, has been about divesting state interests in the economy. So it's a fundamental challenge to see state enterprises coming in and buying up those assets that you previously privatised. The other thing that appeared interesting in the speech yesterday was the idea that China is going to continue to invest heavily in state-owned enterprises. And he laid that out very clearly in strategic industries and in industries that are important to national security. Now, that, when you think about it, has all kinds of implications for trading relationships, bilateral relationships, and China's own ambitions for outbound foreign direct investment. Again, that was referenced quite heavily. So China wants to expand more overseas, wants to invest more overseas, but also it wants to commit very heavily to investing in state-owned enterprises. And if you look at the difficulties that have been run into with foreign acquisitions, it's around state-owned enterprises taking stakes in areas that foreign governments consider to be national security issues of their own. So whether that's in Canada, whether that's in the United States, whether that's in Europe, that would seem to be a tension point. So, you know, China is stating its case very clearly of what it wants to do, and the issue there is whether or not trading partners are cognizant of that.
Mm-hmm. And what do you think could be China's new economic growth points?
Well, in terms of the services sector, I mean, China's been very clear. It wants to expand domestic consumption, and that's not necessarily about consumers rampantly going out and buying things in shops. It's about changing the overall structure of the economy. The services sector is roughly the same kind of size as the manufacturing sector already. If you look at the GDP breakdown, it's not that far away. The fastest growth in terms of jobs and the fastest growth in terms of overall output is coming in the services sector. So that's where the development is going to be, and you'd expect that as an economy matures anyway, simply because the services sector in developed economies is kind of around the 60-70% mark. China's is around the 45 percentage point mark at the moment. So that inevitably will grow as the economy matures. And it's where all the jobs are going to be created as well. It's a much easier place to create employment in the services sector, and it's where a lot of SMEs are based, it's where a lot of entrepreneurs are going to be based, it's where barriers to entry are relatively low on the whole. So it's the kind of area, services in general, is where the growth opportunity would appear to be.